0.25% higher.
And I think with more competition, we expect the overall market size to also grow faster.
Expecting the Fed to cut rates twice in 2025.
They call it Trump tantrum, but markets are selling off, right? After a positive start and positive global markets.
It is a good opportunity to accumulate given large TAM and likely market consolidation as per Bernstein.
In December, I completed 1 year as the CEO of Tech Mahindra. And it's been a fabulous journey, right?
Within TCS, our approach towards this is coming up with newer solutions, newer offerings to our customers.
The actions that we've taken to ensure a very sharp focus on growth has played off.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that's a day so far, and this is, of course, still in a way wait and watch. It's strange, right? I mean, I think Trump inauguration, everything has happened, and still the market is on headline watch, so as to speak. Hugely volatile day is what we've seen. This is closing bell. Lots to track in terms of individual movers, which I think is a lot more important and a lot more prominent than what is happening on the index, because in the index, all told, there's not very much one can really intelligently comment in terms of what has happened up and down a few times over. I'm Prashant. With me, my colleagues Reema and Surbi here. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. And we had peak volatility between 11:30 and 12:30. First, the markets recovered 75 points in the green, and then we were down 200. Actually, we were down 200 points. Then we managed to get up in the green, recovered 75 points up in the green, then down again. And again, we're at the lows.
Absolutely. It's been an intensely volatile trade, right, Nigel?
Well, that's right, and it's that Sensex weekly expiry as well, so that's played a role. And just going by what we have seen, I wouldn't be surprised if the next 60 minutes, are absolutely blockbuster, and I don't think we'll end around here, which is 23,150. I think we've still got a bit of a move, just going by the volatility that we've seen in today's trading session. And just one more point, today the ones that have taken a hit are all those new age companies, whether it's Paytm, Delivery, Zomato, all of them are down. And on the flip side, the OMCs have done well. So you have BPCL ahead of its numbers, that stock is higher. HPCL as well as higher. So I'll keep an eye out on both these two pockets for very different reasons.
Absolutely. And of course, I mean, lower oil, right? That's hopefully much lower oil in the days to come. The market is well supplied, and if Trump is to be believed, it's going to be even better supplied. And I've seen forecasts of $60, within the next quarter. So we're at close to 80 now. So we're talking about meaningful downside if it really pans out. Now, just a quick couple of things here. So big volatile day. Macro markets are stable. The last I checked, the dollar index is not doing very much. Yields in the morning started after the holiday last Friday because Monday was shut. They started about 7-8 basis points lower, and they remain off the Friday levels. Market breadth is negative. I mean, overall, so as to speak. Low on the Nifty, will we at some point test that? I don't know, 23,047 is that level. We're at 23,100. So, 50 points away and then you're there in that sense. Bank Nifty, first support stands at 48,300 or so. And then, of course, the last week's low for the Nifty Bank also comes into focus, but we'll wait and watch. FMCG index is higher, and that's perhaps the sole large sectoral index which is trading up. Real estate as a space is down about 3%. That's the real estate index. I began by saying Trump specifics on tariffs still awaited, and no real clarity about which way they will go and what he will say and what he wants to do, etc. So far, the direction seems to be that it's more pragmatic, it's progressive, it's not everything on day one, etc., etc. And if those things are true, and you combine that with the fact that positioning here is extremely negative, I think it may not be, of course, it's a big if on the tariffs, etc. But if that turns out to be true, I think we could be looking at better days ahead over the next 1 or 2 weeks or so. And of course, then we head into our budget, 1st of February, that's a Saturday. So lots lined up in that sense between now and all the way till the end of the month. Reema.
Hi, the Nifty's just cracked 23,100. There has been another leg of selling pressure that's emerged in the last few minutes. And it's not that the global markets are weak. In the Asian markets, Hang Seng ended with a gain of about 0.9%. Nikkei was up 0.3%. Taiwan managed to close up in the green. Europe right now is flat. And even the Dow futures are currently pointing to a positive start. The gains are not much, but the Dow futures is up in the green. So the selling pressure that we're seeing back home in India is very much, to do with India right now. As we speak, it's IT where we've seen another round of selling pressure. Nestle has lost ground. ITC has come under some pressure. And the big losers today include Trent, Adani Ports, NTPC in the banking pack. The Nifty banking index is down 1.5% with names like an Axis Bank, ICICI Bank crumbling. Reliance Industries is a heavyweight exerting its pressure on the way down. Few places to hide, but throw in BPCL ahead of numbers. Apollo Hospitals, Tata Consumer. So some defensive buying seen in pharma and consumer names.
Yeah, that's the large cap screen. The bigger problem is with the mid-caps because mid-cap index is down about 2%. And if you analyze the trends in the mid-cap arena, it's very clear, this is a market that's rushing in to protect profits. That's what seems to be going on. Look at the entire EMS space. Dixon, you can argue, yes, I mean, you can talk about valuations, you can talk about margins. It wasn't a bad set of numbers, but the market's reaction has been very severe and it's taken the entire pack down with it. Look at what's happening to Amber, look at what's happening to Keynes, look at what's happening to PG Electroplast. And this is a part of the market which has had a stupendous rally. So it seems it's everybody rushing to the exit to just preserve the profits wherever they stay. So that's the EMS space. It's a very clear trend today. And the other trend is going to be in the new age platform companies. It started with Zomato. And again, it's spread to the entire sector. Look at what's happening to Swiggy. Look at what's happening to a PB Fintech, for instance. All of these stocks are down, and on Zomato, it's a huge price damage. Most, by the way, mind you, even after the downgrades and the cut in earnings estimates, most price targets are still well above 200 for Zomato, but the market has a mind of its own, and that's a stock down about 10%. And then there are others. I mean, even Oberoi Realty, where the numbers are good, but the market is in just no mood. It's all about booking profits. Even Oberoi is down about 7.5% at this point in time. Nigel, painful for mid-caps today. Well,
you all came back to me in 3 minutes, and we have the Nifty that's down close to 100 points in those last 3 minutes. And that's why I said that we have still got plenty of action. In spite of having already seen a lot of volatility, I think we're still due for a big move in the last 50 minutes or so. So let's see how that goes. In the last few minutes, I think you mentioned most of the stocks that went down. I think Nestle is one stock that suddenly slipped. And Mahindra, that's the other one in there. And as we speak, we're at the low point of the day. Both the pillars of the markets have moved lower. That's tech. The IT index should come off you, and the Nifty bank as well. Let's get Mitesh back in. Mitesh, what's happening today? It could be attributed to their expiry-related factor. Do you think that if we can survive these, and defend today's low, do you think there's a chance of a bounce back, or do you think this market is telling you that it wants to go ahead and maybe test lower levels, 22,500, 22,800, and the VIX as well is gradually spiking up?
See, Nigel, my belief is that, we had kind of a couple of days back got a signal that the declining trend might be over and we might be looking for a bounce back. Now, the bounce back did happen. If you look at the Nifty from the 13th of January, managed to gain about 300, 350 points, but that closing about 23, 350, which was vital for, gaining strength didn't happen. And then today morning, we started falling, and I said we might retest the lower end of the range. We are practically there, breaking below it now. So I think, this signals that if we break below these levels, then we are looking for continuation on the downside. Most likely to 22,800 and 22,600 are the next two targets which I'm looking at. So I think, this market does look like, possibly we'll see further declines unless until we today recover somehow and manage to close about 23,100 by the end of the day. I think the odds are more in favor of, us going lower to about 22,800 to about 600.
I think we are at, by the way, as we speak, we are almost exactly at last Monday's lows, which is, it was the 13th last week when we had gotten to about 23,047. The 2347 was the low. We're at 2347 now, almost exactly. And I think we should put out an alert because after that low, the market had pulled back nicely. The high today was 23,426, and what a significant turn we've had since. Now, actually, we've broken that. 23,030 is where we stand at. Got to be, I'm not sure there's any sort of fundamental fresh trigger at the margin, nothing from a global perspective or anything. So there is that expiry at play perhaps, but beyond that, I'm not really sure if there is anything new which is bothering the market, apart from, of course, stuff that we've discussed. Midesh, in terms of specific stocks, what do you have?
On the stock side, Prashant, I would recommend a sell on HUL with a stop at about 2360 for targets of around 2290. To begin with, maybe even lower levels can happen. And the other stock which I have is a sell on IGL with a stop at about 402.5 for targets of 380.
Okay, let's get to Dixon Tech. That's in focus after reporting Q3 numbers. Numbers are fine. It's just the high valuation which is hurting them today. And even after the correction, Dixon is trading at 70 times FY26 PE. Upasana is here with more on the numbers and what brokerages made of it.
Well, certainly the stock saw a very steep fall, nearly about 20% off the 52 weeks high. Now, first, let us look at the numbers. The company reported an inline set of numbers with a strong revenue growth, which was mainly led by company's mobile segment, which saw a growth of as high as 190% on a Y-on-Y basis. Now, when it comes to company's revenue mix, the revenue contribution mix of mobile segment increased significantly from 67% to as high as 89%. Now, the management joined us earlier today this morning, and the management has indicated that it sticks to its FY25 guidance. It has guided revenue for FY25 to be close around 40,000 crores, and management has also said that the margins will be around 4% mark in FY26 and even higher post FY26, that is higher than 4%. Now, coming to brokerages, here there are mixed set of reviews. Firstly, let me start with the bulls first. Now, Motilal Oswal has given a buy rating on the stock with a target price of 20,500 per share. It has raised their estimates to bake in the improved performance for the company's mobile, telecom and refrigeration segments, while it has lowered the estimates for companies' consumer electronics, lighting and home appliances. The brokerage expects a revenue CAGR of 55% over FY24 to FY27, which will be mainly driven by EMS and other new emerging segments of the company. Now, CLSA has given an outperformed rating with a target price of 18,800 per share. It says that the triple-digit growth continues. ROC progression is a key to watch going ahead. On the other side, that is, let us look at the bear case. Jefferies has given an underperformed rating with a target price of 12,600 per share. It says even though Q3 was a beat to our estimate, the risk reward of the company seems stretched at 107 times the one-year forward PE. And lastly, Goldman Sachs has also given a sell rating with a target price of 10,240 per share. It says that the earnings upgrade cycle may have halted for the time being for the company.
Smartphones is a lower margin business globally, and so is the case in India. And that is the reason, in our case, we are going to be deploying a lot of resources and capital in a backward integration play, in the components play, which is more margin accretive. So margin, we feel there is going to be in the range of around 4% in 26. Beyond 26, it should start inching up.
Okay, so that's the Dixon story today. It's not just a Dixon story anymore. Like I said, look at PG Electroplast, look at Amber, look at Keynes. All of these stocks are coming off their respective peaks. Let's take the conversation forward with Deepak Shenoy, founder of Capital Mind. Deepak, great to have you on. I'm a little baffled, I must say. We all know that these stocks have been trading at elevated valuations, right? Depending on which one you're looking at, 70, 80 times, 90 times forward earnings. But I don't know if Dixon's performance was, so bad that it could trigger such a massive decline across the sector. So I don't know, sure, we all know that they've been in a business where the margin has been very range bound between 3.5% and 4%. This is not new. So what do you think has happened today?
Afternoon, Surabhi. I think, the Dixon numbers were good and we own it in one of our portfolios. So a little biased there. But given the numbers itself, I don't think the numbers were a concern. But this is one of those quarters where regardless of whether you announce good numbers or bad, in fact, sometimes if you announce good numbers, it's probably good enough reason for the stock to fall. Some of these stocks, of course, are at extended and stretched valuations, and the numbers, even if you look at Dixon's growth, they'll have to maintain this growth for at least 3 or 4 more years. And I think they can in terms of either inching up margins or inching up revenues. because of the scale of the business they're operating in is relatively, they're a small player in a relatively large space. So even though they have a 40,000 crore revenue, I think over here revenues will probably inch up to, for companies of their sort, upwards of 75-80,000 crores in the next few years. So I think there is a lot of growth over here, but then valuations have also been stretched. You got to, people will have different expectations of stocks going forward. So I think if you're allowing it to go up 10-11%, it should be able to fall 10-11% as well. And therefore, you'll get either opportunities or people will exit at some either a profit or a loss. I don't think this is a meaningful, this is meaningful for us in the short term. I think it'll give us opportunities. It's still not at a level where I would have just said, blindly buy a stock like this. But I think it provides a better cushion now than it used to earlier. I don't have a problem with the business. I like the scale of it and the overall things. But you're going to accept that at some point the valuations being too high will correct to more meaningful numbers, and the company will have to demonstrate its growth to bring it down to a meaningful valuation even at these numbers.
We spoke with the management. They told us that they make 8 crore phones now. Android phone market size is 14 crores in India annually. 8 is Dixon. So, and that overall, that 14 crore number is not increasing. It's actually very, very stagnant. And I think, of course, as I think Nigel was in the morning pointing out, after that call yesterday, there was some worry about the new investment into this display manufacturing. And they spoke about some very large numbers. Now, that is dependent on government subsidy, government funding about 50% of it. So what if, the government, it's a large one for the Dixon balance sheet. Of course, with government subsidy, but since it is government subsidy, and I mean, if it's the government at the end of the day, I think there are those kind of worries as well, that you need that. And that project, by the way, is at least 3 or 4 years out. They said that, well, that's a higher margin business, high single digits compared to Dixon's 3.5-4%, what they make currently. But anyway, I mean, Dixon is still trading at 100 times FY25 earnings. If they do about 900 crores in profits, even after today's 13.5% fall. So that is sort of the perspective on the stock. MCX is the next one we're going to address with Deepak, but let's do that first with Vamakshi, who's got the details on the numbers and what really disappointed because stock's down sharply. Vamakshi, take it away.
Well, absolutely, Prashant. The stock is seeing a big knock today in the trading session. The growth rate on a sequential basis has slowed down. The growth rate in the second quarter was in double digits. It has now lowered to almost single digits. Revenue saw an uptick of only 6%. EBITDA was up 8%, and the net profit saw an uptick of 4%. The margins have improved by 125 basis points, but this is much lower as compared to the 600 plus basis points improvement that we saw in the second quarter. Now, when we look at the key internals, nothing much happening here as well. Traded clients stood at 6.9 lakh. This is an uptick of only 1.5% sequentially. The average daily turnover for both the futures as well as the option segment for the company saw an uptick of 6.9%, and this growth is largely being led by the option segment. The market share was more or less the same. It has improved marginally from 97.84% to 97.97%. So overall, when we look at the numbers, not a great set coming in from MCX. But apart from that, there's a brokerage note that came in from Morgan Stanley. They have an underweight call on this, target price of 3,715 rupees per share. They say that core EBITDA was in line, but higher SGF contribution led to the miss on the net profit. There has been stagnation in average daily revenue in recent months, and they believe that if this sustains, it could result in meaningful downgrades to both consensus revenue as well as earnings. They find the current valuation stretched given low conviction on sustainability of revenues, which carry significant concentration risk. So not such a great outlook coming in from Morgan Stanley as well.
Okay, all right. Thanks a lot for that, Vamakshi. Deepak, what do you make of this one? MCX, the one under big pressure today.
Yeah, it's actually surprising. Again, I thought the results were quite good. But here's an interesting thing over here. After November 20th, when the options volumes in the BSE and NSE stock options market or index options markets have been coming down, I think activity started to be much more pleasant in MCX, which has commodity options. I think people are moving there slowly because you don't have the same level of restrictions that you do in the index options market here versus what is happening there. Plus, crude futures and bullion are relatively highly traded in MCX, which are not, which are not related to the index, and there's a much better format over there. I think going forward, if you look at the mix, I think relatively speaking, the BSE NSE volumes in the options markets will probably migrate a little bit more towards MCX. They had that big cost earlier, which was what they were paying, I think 63 moons or something, which was hurting their margins because that was a software cost that they needed to keep on their books because they had 63 moons as their vendor. There's a lot of history behind that, of course, and then they've shifted that over to TCS, and the cost over there does not seem to be meaningfully large. So going forward, I think those margins will also start to improve going forward. I think we'll start to see better financials both from a revenue scale perspective because of the options moves and lower cost perspective because of whatever finalized amounts seem to have materialized with TCS. And therefore, I think this may be an interesting play. I don't have it in some of our core portfolios, but this looks like an interesting point. It may still be expensive, so you got to be careful about the price at which you buy. But it definitely seems to be a meaningful turnaround now, and unless there are more restrictions coming on commodities trading, I think this might be an interesting story to look at.
Thank you very much, Deepak, for joining in. Lots of casualties today, even something like an Oberoi Realty. Again, numbers were not too bad. 33% top line growth, 70% jump in the company's profitability. And here it's not that the stock was very expensive. It was trading at 30 times PE. It may have missed street expectations slightly according to Morgan Stanley, but stock is down 8.5%. Even Newgen Software, there was a Jefferies downgrade. And Newgen Software has tanked close to about 15%. Deepak, thank you once again for joining in. It's time to get into a short break. But before that, it's Growth Code Time, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed trading decisions. This week, pro trader Rajesh Baheti, Managing Director of Cross Seas Capital Services, gave his insights on the new SEBI guidelines for algorithmic trading.
So currently, there is no real regulation as such that debars anybody from trading in algorithms or using algorithmic trading. What is happening is there are two kinds of algorithmic trading strategies that are being deployed today. On the professional or prop side, as what we do, all of our algorithms are approved by the exchange. The trades are entered as algorithmic trades. There's an identifier in the order sequence that identifies the trade as an algorithm. What is happening with the discount brokerages is that they are exposing their APIs, and anybody with access to that API can either write their own code, or there are some pre-authorized vendors who have already matched their trading strategies to these APIs, and they are farming it out to the retail public. And these trades typically don't get registered in terms of an order identified as an algo trade, but rather as a standard internet trade. And I think SEBI has a problem with that. They don't want the algo trades to be identified as standard internet-based trades. They want the algo trades to be identified as algo trades even for this retail segment who are currently coming in using the APIs exposed by the brokers. What SEBI wants to do is that if you want to run an algorithmic strategy and you want to write your own code, then you've got to get that thing certified with the exchange. The strategy has to be approved. And in case you are outsourcing it from certain vendors, those vendors will need to get registered as some kind of investment advisors.
Track your investments on the go with MK Wealth Navigap. The Honeycomb View offers a macro asset overview, making it easy to adjust sector exposure.
Get in touch to know more on info@mkwealth.com. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Can someone working alone solve all the world's biggest challenges? Isn't collaboration the way we'll make lighter, more sustainable packaging and generate limitless energy? At SABIC, we believe the chemistry between people is the chemistry that matters. SABIC.
बड़ी बहू, ये तुम्हारे नाम। इतनी भी क्या जल्दी थी? अरे और छोटी, ये तुम्हारे नाम। और ये मेरी गुड़िया के नाम। पर दादी, हाँ? आपके नाम?
सब कुछ मैंने बैंक, लॉकर, फिक्स डिपॉजिट सब में इन्हें ही तो नॉमिनी बनाया है। कल जब मैं ना रहूं, तब पैसे मिलने में इन्हें आसानी हो।
शुभ शुभ बोलो। क्या?
आरबीआई कहता है।
जानकार बनिए, सतर्क रहिए।
What makes me want to drive? What makes my imagination go wild?
I like living on the edge and going beyond it.
I live for the rush. I want to feel alive every day.
Imagination
Is a powerful thing.
Introducing the electric SUV e-Vitara. Spark your imagination.
The countdown has begun. Get set for Utkarsh Odisha Make in Odisha Conclave 2025. Dive into unmatched networking opportunities and open up a world of possibilities. Immerse yourself in the Utkarsh Odisha exhibition and witness Odisha's bold vision for 2036 come to life. Celebrate Odisha's rich heritage, culture and unstoppable progress. Lock your dates, 28th to 30th January 2025 at Bhubaneswar. Be there for the Utkarsh Odisha Make in Odisha Conclave 2025, where the future will be taking shape.
The countdown to the most awaited global event of the year has begun. The World Forum of Accountants 2025, organized by the Institute of Chartered Accountants of India. 3 days filled with insightful discussions and deliberations on challenges, trends and best practices in the accountancy world. Over 150 plus global speakers, over 40 knowledge sessions, and more than 6,000 delegates unite at World Forum of Accountants from 31st January to 1st February 2025 at Yashobhumi, New Delhi.
I will take you to Paris.
Paris नहीं, Paris. तुम्हारा pronunciation भी ना, तुम्हारे इरादे की तरह.
Off. मैडम इरादे कभी ऑफ नहीं होते हैं, टेक ऑफ करते हैं.
SBI Life Smart Platina Supreme के guaranteed return से करो पूरे अपने इरादे, अपनों से किए सभी वादे. SBI Life, अपने लिए, अपनों के लिए.
Welcome back. Well, the markets have at least defended the 23,000 odd mark, and there have been various attempts, that we've gone out there, we've broken it, but at least for the time being, we've defended that. And given that it's an expiry day, sometimes things can turn on its head, and that's what could lead to a big recovery. So don't rule out a quick fire recovery from here on, but sustenance will be very, very important. As we speak, 23,025 is where we are at. Raunak Onkar of PPFA Mutual Fund joins us on the show. Hi Raunak, good afternoon. Good to see you in. Well, Raunak, before we start this conversation, I wanted to compliment you guys at PPFA because I was looking at all the flexi cap funds, and it appears the NAV from the peak, I think if you could correct me if I've got the number wrong, but I think yours is just down around 4 to 4.5% or thereabouts. And I've seen other funds that are down anything between 15-18% or thereabouts. So good work on that front. Is 4-5% the right number?
Yeah, it's the right number. And thank you, Nigel, for inviting me. Good afternoon as well.
Good on you all. Then investors will be counting on you all, helping them to get through this very, very volatile phase. A couple of other questions then. Let's focus on the largest sector, which is the banking space. And at the start of this year, a lot of people are telling us that's going to be the space to be in, because valuations are attractive. But the bank index itself actually has relatively underperformed for the last couple of weeks. However, if I look at your portfolio, it seems you'll have got things right. Why do I say that? Because Kotak Mahindra Bank it was an underperformer and you all were loading up on that one. While if I look at the last couple of months, you all have actually exited RBL Bank. So give us your analysis of the banking sector and will you all continue to do more of the same? Kotak Mahindra Bank appears it's one of your largest weights now from the banking space.
Nigel, we only have had 4 private sector banks as the core part of our portfolio. The HDFC Bank is the largest, followed by ICICI, Axis and Kotak. Now, the other RBL bank that you mentioned must be an arbitrage position, which again is not part of the core portfolio. It is a cash to futures arbitrage that we do as part of the cash allocation that we have in the portfolio. But you're right, on the banking side, the valuations, not just for the past couple of weeks that you mentioned, the overall last 4 or 5 years has been a drag for most of the valuations of private sector banks. And despite the businesses have been going okay, they're not been growing very fast, but they are at the size that they are considered, they are doing quite well. I think that should continue over a long run because these banks have a large distribution reach, they have good brand franchises, at the same time they have a large non-banking, which is the fee-based income as well. So it remains to be seen how big they grow and how fast they grow, but I think there's a lot of growth ahead for the banking space.
Out of the way. You all were one of the funds that had a lot of cash in the books. Could you update us on what is that cash number? And given the pullback that you have seen in the markets, are you all gradually deploying or do you all believe there's further downside in stock?
So we have been gradually deploying. The cash position in the FlexiCap fund is about 21 point something percent and the tax saver fund is about 17.5 or 18%. So whatever ideas that we already like and are reasonably priced, like private sector banks, a little bit of Mahindra and Mahindra, which we added recently, or Narayan Hrudayalaya is something new stock we added recently. Some of these areas where we find valuations to be reasonable, we have been adding, but broadly we have not been deploying very aggressively.
What about names like a Zomato, Dixon, which were expensive, very expensive? They may still be expensive, but they've fallen 20% from the peak levels. Would they be attractive for you to enter and buy at these levels?
So 2 things for business models like Zomato or Swiggy, which are newer age businesses. I think the business model long-term trajectory seems to be good, but at the same time, the entry valuations and the understanding of the cash flows as to how stable they will be over a period of time, that remains to be seen. So we study these companies very closely, but so far we haven't made up our conviction as to whether it's something we would like to own and what valuation we would like to pay for them. At the same time, companies like EMS, players like Dixon and otherwise are again great sectors to be in with structural changes happening in our country and should benefit these companies. But again, the starting valuations have been very high. So we've been tracking them right since their IPO, but it's been very hard to justify the valuations, but they have actually grown very fast. So it's quite interesting that the company has done very well.
Okay. Raunak, hi. You've also liked capital markets related plays for a while, right? I mean, the whole story of financialization, you've played that through stocks like MCX, I remember, I think even Motilal Oswal. But now, obviously, things are a little different. The market's going through a rough patch, and whether we see, the client addition data, or even if we see the, total, premium turnover, etc., or average daily turnover, most of those numbers have been trending lower. Look at M6 is looking at a sharp reaction today as well. So what are your thoughts? Do you think it's time to book some profit, or will you remain, steady on it?
So I think what parameters you mentioned are actually very normal for companies like these. So when you look at capital market businesses, they are very, very cyclical. And as the capital market cycle draws, the volumes and the profit margins also shrink over a period of time. So knowing that this business is cyclical, we have been exiting some of them over a period of time. We have been slowly shrinking our allocations to these companies over a period of time. But those are normal things. They happen with capital market linked businesses, that the volumes shrink, the profits shrink. And when the market is doing very, very well, and like we saw in the past 2-3 years, these numbers can look extraordinarily better over that period of time. So we have to be very cautious as to how much we attribute to these cyclical earnings versus the longer term normalized earnings for some of these companies.
Raunak, HCL Tech is one of your preferred large cap IT bets. The stock reacted very negatively to its numbers. So what did you make of the market reaction to what otherwise appeared to be pretty okay? And what have you done to your holding?
So we have had the same holding since last month. But with companies like IT services, those are more or less stable businesses which generate money through services selling to clients. Now, over a period of time, that cyclicality has also been expected, where people were already building up these companies based on the anticipated growth that they will have. And those numbers came true. So it's not like the growth has been over and above what the expectations were. So some of these quarterly aberrations will continue to happen in the stock price. What we look at is whether these companies will stay relevant over a period of time. How are they competitively positioned compared to the GCCs coming in? Those are some parameters we are really keen on understanding. So it remains to be a large part of the portfolio. It is part of both FlexiCap as well as TaxSaver. And IT services, the space is also very stable, cash generating space, which has a long runway ahead of it.
Then one final question then. 17% holding, cash holding in one of your funds, 20% plus in the other one. What are the opportunities you're scouting for?
Actually, everything. So our research team has always been busy in trying to find new sectors, new companies, new ideas. So the number of ideas we pitch internally and discuss internally has always been the same. So we keep on studying. It does not mean that we will swing at every ball that we see. We will wait for the right pitch and we will wait for the right ball, and then when the bounce is right, the valuation is right, then we will see that this is a company we would like to own. And we have added a couple of new stocks in the portfolio as well. So it's not like we have not been studying companies.
Tell us about the new stocks you've added.
So we've added Narayan Hrudayalaya and Mahindra.
And Zomato, has fallen from 300 down to 220, 218. At what point does it attractive? Because you've been studying it for a while, but waiting for the right entry point.
I wouldn't know, because the business also keeps changing. So at one point when the growth was very high, you would probably sort of justify some of the pricing of this company over a period of time. But we have to see how the growth is sustainable, where the normalized cash flows of this business lie, and whether the business model also stays relevant, because this company keeps adapting over a period of time with different services that they keep on offering. So some of these companies are good to study for now, I think. But for us, maybe somebody who understands it better may already have it in their portfolio.
So cash level, just to go back to that point, I think at the peak it was some 16%, right, Raunak? Now it's come to about 11% in the portfolio, right?
At the peak, it has been 30% in 2018. Now it is at about 21 point something percent in the FlexiCap fund and about 18% in the TaxSaver fund.
At about 21% in the FlexiCap fund. Wow, I didn't know about the 2018 peak. So still not deploying, right? I mean, there are a fair amount of weightage, I guess, increases on some of the BFSI names that you've discussed, the capital marketplace there. Also, you're cutting positions. You're still not buying. As and when you decide to, what is looking the best, where valuations and growth are meeting your expectations? Which are the sectors where perhaps you'll bite first?
We're actually buying, but not very aggressively. So like I mentioned, we added a couple of new stocks, and the existing stocks where the valuations are still reasonable, we continue to add and maintain the positions and the weights in the portfolio. But we're not very aggressive in finding new ideas and buying something. We keep studying different ideas.
I heard something very interesting on Zomato, since Zomato came up a few times. That Zepto wants to IPO, right, in the next few months or so. Zepto, I think we were just checking the Zepto app and finding things much cheaper on Zepto. Yeah. So basically, they are the price disruptor in that sense. Now the thing, and they've done 2 rounds of fundraising recently. So they have cash of about, and this was from someone who owns, so take it with that. They have Zepto's cash of about 6 or 8 months in the bank. And they want to IPO. The point is, can they continue to be such a big disruptor price-wise without hurting their own prospects at the valuation that they want to come in? So that's in a way, that's the bullish view, that they will not continue down that sort of, price disruption path, lowering,
if they want to
cutting
come to the
prices,
market.
etc., if they want to really tap markets and do a public issue. But on the flip side, I think what is also interesting is, if price is the only moat that you have, right? If actually price is not a moat, then should you actually get these kind of P multiples?
Be looking at the businesses in such light. I think that's a great question, Prashant. And I remember we were discussing this just after the numbers came in, the market closed. That, I mean, more or less, you're getting the same product. The service quality could be, quantified or qualified in terms of the time of delivery and the fact that you get the right products. But I still think that price is the biggest differentiator right now, which makes people switch from one to the other. So I think this is pretty interesting.
If there is no moat at all and price is the only thing, then, it's not. I mean, airlines, for example, right? I mean, one airline gives you, say, a seat which is $100, $200 cheaper. People will take it. I mean, it's similar. And that's why I guess airlines have never really got a very high sort of earnings multiple or whatever.
Well, there you can still argue in terms of service standards. You know, back in the day, you could talk about, you know.
You were talking about the platforms, right? The platforms with service,
Yeah.
So not the airlines, but the platforms.
I was talking about, I'm sort of making a point that airlines also as a business, there's no competitive advantage in that sense. Service, perhaps, yes.
Maybe to some extent, but here with platform companies, price is a massive sort of determinant of which way the customer flow goes. Well, with that, let's take some, a final quick word with Raunak. Raunak, on the market as a whole, overall, I mean, clearly you guys are cautious. You're deploying money also very judiciously. Earnings estimates have been coming down. What do you see ahead? I mean, this is kind of a guesstimate sort of a question, but next 1 to 2 months, it's been a tough now, almost 3.5, 4 months?
I think 2 months is a very short cycle to even estimate, but I think over a period of time, we are seeing businesses which have cyclically peaked to some extent, are seeing some normalization in their overall profit and growth trajectory. And if you see companies which have been downtrodden and they have been struggling to maintain valuation at interest at least, those companies are seeing some relative attractiveness in terms of the business which is anyway doing well, but valuations are now catching up. So I think the market is behaving exactly what it does. The volatility is, I think, a feature of the market and not a bug. So we should understand that don't overpay, protect your capital and play for the long run.
Okay, all right, Raunak, thanks a lot for joining in. You'll have done a relative outperformance till now. So, now you'll have to keep it up so that your investors and all your participants are happy. Thanks a lot for joining in. Appreciate you giving your views. By the way, as we speak, HDFC Bank is cutting its losses, which is one of the reasons why the Nifty is not falling apart yet again. So that's the heaviest weight in there. And that's now down less than 0.5%. It was down more than 1%. So that's a bit of a relief. But let's get in Nimish. Nimish, tell us, what are you picking up? Expiry related, or is there something more to worry?
Well, I guess while the Nifty has been very volatile and maybe 200-point move we've seen at least 5 or 7 times in a single session, which is very unusual. But yeah, that's the kind of a day which is. But I guess the big story of the day is clearly the momentum stocks. Massive correction in those momentum names, and the feedback is there is a bit of withdrawal as well from the momentum fund. So that's a bit of a worry now that people have started withdrawing money. Not only investors, but I understand even some large guys, large treasury offices has taken out money from the momentum fund. So I guess that's the reason why you're seeing so much of pressure, and none of the stocks are able to bounce back in today's market, whether it's Paytm, whether it's Zomato, whether it's Dixon. They all are part of that momentum basket and all under pressure today. Largely from an FI flow perspective, it's not that bad. The Nifty may look 300 points down, but it's more or less equal to what the DI buying is. So again, 1:2 could be the sell-side buy-sell ratio, but it's not very large selling is what I understand from FIs. Technically, 23,300 is a level to watch. So again, we keep saying that that's a level. If that gets broken out, which potentially looks like given today's Nifty levels, maybe 22,800 is a level to watch. But I guess the bigger pain seems to be in the momentum stocks, and that's where I guess the redemption outflow is also not a good sign.
Okay, all right. So on the institutional flow side, not so much to worry, but some redemption pressure, particularly in the momentum names. That's the worry. What about individual stocks, Nimish?
Well, so in terms of individual names, the first stock is Kalyan Jewellers. A big fall in that name in the last couple of days. But there are first signs of small buying emerging from larger FIs into Kalyan Jewellers at these levels. So that's the first name. Second stock is Zomato. We all spoke about the mode, the valuations, comparing to Swiggy and whatever. But even after a gap down, the stock has actually been at the day's low, and largely because of aggressive selling from larger FIs. So it's an overrun stock, and now you're seeing a bit of reversal in terms of flows as well in Zomato. So that's the second name. The third stock is Exicom. Well, the stock has corrected sharply from the 52-week high. Off late, it's been consolidating, and the buzz is that maybe the company is likely to bag a large order very soon. So that's something to track in Exicom Tele. And the last is Apollo Hospitals. In a weak market, that's actually bucking the trend. Buzzing in trade up to 1%, the volumes on the higher side. There is buying interest from larger FIs, and interestingly, there was a Kotak upgrade as well in the morning. They've upgraded the stock to a buy, and they believe that this is the best play in the hospital space. So that's the reason why Apollo Hospital is buzzing in trade today.
Thank you very much for that, Nimish. Get into a break. But before that, here's some good news for all our viewers, because India's business news leader is now just a click away. So introducing CNBC-TV18's all-new app. Get instant access to breaking news, all our articles, financial world updates at your fingertips. So don't wait, download the CNBC-TV18 app now from the Apple or the Google Play Store, or you could just scan the QR code on your screen.
हाँ तेरी भी बात एकदम करेक्ट है। ये देख माने 2 महीने में पैसा डबल। मैं तो इसी स्टॉक में पैसा लगाऊंगा।
लकी यार तेरा वो 7 दिन में जवान करने वाला फेस पैक दिखा ना।
क्या बकवास कर रहे हैं? कुछ भी।
क्यों? जब तेरा स्टॉक 2 महीने में पैसा डबल कर सकता है तो लकी का फेस पैक 7 दिन में जवान नहीं कर सकता?
राइट है।
मिस्टर माने बड़े से आने, अब न फंसना किसी बहाने।
Can someone working alone solve all the world's biggest challenges? Isn't collaboration the way we'll make lighter, more sustainable packaging and generate limitless energy? At SABIC, we believe the chemistry between people is the chemistry that matters. SABIC.
ये क्या है? असली नोट? ब्रो, ये फटा है। सुन, कते फटे या पुराने नोट को बैंक ब्रांच में एक्सचेंज कर सकते हैं। वाओ, नया नोट मिलेगा? हाँ, जिससे तू हमें पिज्जा पार्टी देगा। RBI कहता है स्मार्ट बनो, कूल रहो।
Compare fund details, make informed decisions, and conduct multi-channel transactions, all with the MK Wealth Navic app.
Get in touch to know more on info@mkwealth.com. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
महाकुंभ 2025 के पहले अमृत स्नान पर संगम तट का नजारा दिव्य, भव्य और अलौकिक रहा। महाकुंभ के पहले अमृत स्नान पर भक्तों का ऐसा सैलाब उमड़ा कि दुनिया के सारे रिकॉर्ड टूट गए।
श्रद्धालुओं ने प्रयागराज में मां गंगा, यमुना और सरस्वती की पावन त्रिवेणी के संगम में डुबकी लगाकर के पुण्य के भागीदार बने हैं।
मकर संक्रांति के अवसर पर 13 अखाड़ों के साधु संतों ने स्नान का पुण्य लाभ अर्जित किया। इससे पहले महाकुंभ के पहले दिन 1,65,00,000 से ज्यादा लोगों ने आस्था की डुबकी लगाई थी। योगी सरकार के सफल प्रयासों से महाकुंभ में स्नान करने वाले भक्तों की हर दिन भीड़ लग रही है।
सेफ इन्वेस्टर्स के लिए, बोल्ड इन्वेस्टर्स के लिए एंजल वन फॉर एवरीवन। 2.5 करोड़ इंडियंस की तरह आप भी शुरू कीजिए।
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Welcome back. Some kind of stability, at least as of now. HDFC Bank, that's come off a little bit from the day's low, so that's giving some bit of a breather to the bulls. But Nimesh is still with us. Nimesh, you were talking about momentum funds, seeing some bit of withdrawal. There are a lot of these stocks that are very, very high PE. Yeah. And any case of disappointment is the stocks are getting slammed. Give us a picture about them. How are they trading at currently, even after the correction? And what does it compare with its normal valuation?
So, Nigel, I just looked at this data because, there was a lot of queries about what happened to Trend, what went wrong with Trend, or maybe today what went wrong with Dixon or Zomato for that matter. I was just looking at the Nifty 50 and the Nifty Next 50 in terms of the most expensive names and how they performed from the recent peaks and where the valuation stands at. So, if you look at in the Nifty 50, the big underperformers from the 50-week high, which have fallen very sharply off late. Top of the chart is Trend, which is down 30%, Asian Paints is down 32%, Adani Enterprises is down 35%, and the two auto twins, Bajaj Auto and Hero MotoCorp, both are down close to 35%. Now, the second plate would be their average 1-year forward PE versus the 5-year average. If you look at Trend, after the correction, it's still quoting at close to 92 times on 1-year forward, whereas the 5-year average is close to 120 times. So it's always been historically a very inexpensive stock, that is Trend Limited. The second is Asian Paints, now it's trading at 44 times versus their 5-year average of 64 times. Similarly, Adani Enterprise now at 36 versus the average of 5-year average of almost 77 times. Bajaj Auto is an interesting name. Well, the stock is sharply corrected. Even after the correction, it's trading at close to 24 times versus the 5-year average of 20 times. So valuation-wise, it's still not corrected that much from a valuation perspective. Same is the case with Hero MotoCorp as well. It's still trading at close to 17 times versus 5-year average of 17 times. So these are the Nifty names. Even if you look at Nifty 50, which is largely the momentum names and so-called high flyers, look at the big underperformers there. Zomato is down 30%. Avenue Supermart is down 35%. ABB is down 30%. BHL is down almost 38%. And even Hindustan Aeronautics is down 27%. Now, if you look at their respective one-year forward multiples versus 5-year averages, Zomato, after the correction, is still at 125 times on 1-year forward, and the 5-year average has been close to 122 times. So it's always been an expensive name, still quite expensive stock. Avenue Supermart, now it's trading at close to 71 times on 1-year forward. Historical average is close to, 5-year average is close to 92 times. So it's been an expensive name, but it's seen a sharp correction of late in the last 1 year or so. Same is with ABB. Historical 5-year average has been 71. Even after the correction, it's quoting at 65. BHEL is interesting name. The stock is corrected sharply from the 50-week highs, still trading at 34 times on 1-year forward versus the average was close to 40 times. And last name is Hindustan Aeronautics. Now after the correction, it's quoting at close to 31 times versus the 5-year average was 22 times. So a lot of these high-flying names have corrected sharply, largely on the back of a bit of earning disappointment, or the fact that the valuations are so high that there is very limited room of error, a small error here and there, and you'll see a sharp correction. So that's the reason why we put out this data, that while the stocks have corrected, in terms of PE multiple, a lot of the stocks are still trading much above their 5-year averages.
Well, that indeed is the narrative driving today's moves in individual stocks. Thank you very much, Nimesh, for highlighting that. Mitesh is now back with us for a few BTST calls. Mitesh, first a quick word. The Nifty is at 23,000. And what will the trades be?
Yeah. So the Nifty, I think, as I said, getting below 23,100, 23,050 zone suggests that 22,800, 22,600, 550 zone is the likely target. We still remain negative. And therefore, on the stock side, STVT on KEI Industries with the stop at 40.50 for targets of 30.75. While Kotak and disclaimer is part of my portfolio, Kotak is something which has given a pullback after a breakout yesterday. So buy here with the stop at 18.74 for targets of 19.30.
Okay, thank you very much for that. In fact, let's talk about Zomato and the other quick commerce companies. Mangalam is here to give us more color. Mangalam.
Well, we know that Zomato is lower because, there is limited visibility on profit and margins have been put a pause on the quick commerce business, even as the food delivery is seeing some signs of slowdown. But every time Zomato moves up or moves down, we have Swiggy, which is now attached to it as well, because we're looking at the valuation differential between both Zomato and Swiggy. Remember, Zomato's weak commentary around quick commerce has impacted Swiggy's performance too. Since Swiggy's IPO price, the valuation gap between the two narrowed, but from highs, both Swiggy and Zomato have fallen. Swiggy a little more. So let's keep an eye out on the valuation differential. At the issue price of 390, Swiggy's discount to valuation discount to Zomato at that point was close to around 65%. Thereafter, we saw Swiggy move higher and Zomato move lower. At Swiggy's peak, that discount narrowed to around 32 to 35 odd %. Now with the decline once again, there is the valuation gap which is widened between Zomato and Swiggy, close to around 50 odd %. So it'll be very interesting to see if, someone again looks at this space and the valuation differential between the two and decides to back either of them. The key to watch will be growth in margins for Swiggy from here on, along with quick commerce. Whereas, for Zomato, curtailment of any sort of losses in the Blinkit business and recovery in food delivery is the big trigger that everyone will be looking at.
Right, Mangalam, thank you very much. Very interesting discount to Swiggy. Swiggy, of course, that's the benchmark. Others kind of move around it, sometimes at a steeper discount, sometimes at a lesser discount. But 50% now after the correction that we've seen. We'll take a quick commercial break here, come back on the other side, Jay Bala on the other side, and we'll talk technicals. Stay with us.
ये है कॉल सेंटर वाले स्कैमर, रिवॉर्ड्स का लॉलीपॉप लेकर आए हैं और हमारे नागरिक को लगता है कि इनकी किस्मत खुल गई है। ओ मैडम, रुक जाइए, अपने बैंक डिटेल्स डालने से पहले साइट तो वेरीफाई कर लीजिए। SBI की स्कैम सेफ टिप्स से आप बनोगे स्कैम प्रूफ। ऐसे कॉल से रिवॉर्ड नहीं मिलने वाला, क्योंकि दाल में है कुछ काला। बी स्कैम सेफ।
मैडम जी वो सारे पैसे लेके भाग गए।
दिखाते हैं इनको।
डीलर निकाल दे इसके हवा।
पंक्चर के बाद भी इससे हवा नहीं निकलेगी क्योंकि ये है जेके पंक्चर गार्ड टायर जो कील लगने के बाद भी होता है हील। जेके पंक्चर गार्ड टायर, अब हवा नहीं निकलेगी।
That's okay. फिर से ट्राई करते हैं।
जो फाइनेंशियली सिक्योर हैं, वो मिस्टेक से सीखना अफोर्ड कर सकते हैं। बंधन म्यूचुअल फंड, बढ़ते रहो।
म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से संबंधित सभी दस्तावेजों को ध्यान से पढ़ें।
इच्छाओं की कोई उम्र नहीं होती, आज हो या कल आंखों में हरदम चमकती, कल भी रहे आज के ठाट, ना हो टेंशन रिटायरमेंट के बाद।
अरे नो टेंशन।
हाँ करनी है तैयारी एनपीएस जरूरी है, करनी है तैयारी एनपीएस जरूरी है।
The countdown to the most awaited global event of the year has begun. The World Forum of Accountants 2025, organized by the Institute of Chartered Accountants of India. 3 days filled with insightful discussions and deliberations on challenges, trends, and best practices in the accountancy world. Over 150 plus global speakers, over 40 knowledge sessions, and more than 6,000 delegates unite at World Forum of Accountants from 31st January to 1st February 2025 at Yashobhumi, New Delhi.
You work too hard. Work smart like me.
Why? Won a lottery, is it?
You can say so. I'm investing in a great scheme in the share market. High returns guaranteed.
Your high returns aren't Karan Arjun for them to definitely come to you.
Meaning?
Dad, there's risk involved in the share market. Nobody can promise guaranteed high returns. It's illegal to do so.
Really?
Yeah.
समझ कर इन्वेस्ट कर।
Available in turbo petrol, diesel and EV. Tata Curve, the most feature-packed SUV.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family. Am I right?
Let's close the deal.
Thank you.
Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
Welcome back. We're down to the last 2 minutes of trade, and this has to be probably one of the weakest sessions that we've seen in the last many weeks. The saving grace for the bulls is that they're trying to ensure that the close is above last week's lows or just around last week's low of 23,046. Though, of course, in today we've had a breach of even the 23,000 mark. And India has been a rank underperformer once again. I mean, none of the other key global markets, whether it's Asia or Europe, none of the other markets have seen such weakness. US futures have been modestly higher. This is our individual issue. So where was the weakness? 300 points down on the Nifty. Weakest names on the index include Trent, Adani Ports, NTPC, Bank C across the board selling. So ICICI Bank, State Bank of India, Axis Bank, all of these names on the lower side as well. Throw in an HDFC Bank as well. Though relatively HDFC Bank didn't fall as much as the others. Reliance wasn't offering any comfort or support, down 2% over there. In fact, I mean, even if you're expecting any support from FMCG or IT, there was really not to come. Some very, very minuscule buying on stocks like a Tata Consumer. You can single out maybe Apollo Hospitals, ITC and lever at the flat line, but nothing else. IT Pack, Infosys, TCS, Wipro, most of these names have ended lower. TCS, in fact, is down about 1%. So weakness across the board coming through, but the large caps are just one small part of the story. The much bigger headline was the deeper pain that we've seen in the mid-cap market today, with the mid-cap index losing over 1,200 points.
Well, it's a sort of pretty poor session, right? And lots of pockets of pressure which actually came through. So, the Zomato and Swiggy, of course, were obvious big names which sold off. The EMS companies all came off very, very sharply. So that's the quick commerce, but Dixon, Amber, Sirma, PG Electroplast, that was another pack which came off hard. Real estate, Oberoi Realty, Lodha, Prestige, Anantraj, I mean, as a pack sold off. You had, names like MCX, which was hard hit. There was Kalyan Jewelers, which was sharply down. Motilal Oswal Financial Services saw a bit of a knock. Newgen Software after earnings. Policy Bazaar, big knock today. Mankind Pharma, K Fintech, Greaves Cotton. I mean, just highlighting what went down with very large volumes in terms of trade. So I think we've basically left off everything told. I'm not sure if this is the adjusted close. I think we're getting the adjusted close, but we basically left off at last Monday's lows, 13th of January's lows. 23.24, 23.47 was the low. So you're round about there after breaking 23,000 briefly earlier. Precariously poised in that sense. It's a wrap on this edition. A closing bell from all of us here is goodbye. But Surbhi and I will take you through markets forward coming up in just a bit.
Co-powered by SBI. Be scam safe.
Mama must be missing us, na?